One key thing that I would suggest that you do in your trading is understand the concept of buy low and sell high. Okay, so obviously you need to know the trend, the momentum, you need to know the other parts that are discussed in other videos in the course, obviously, and obviously from your overall knowledge yourself. You can't just go and be like, right, I'm going to buy low and sell high and not look at the overall picture, not get the overall details of each time frame, going time frame by time frame to then help decide what's happening. But whenever you find something to trade, you have to then obviously you've got your expectations, what kind of trade it is, your trade selection, is it a reversal, is it a continuation? But you have to make sure that you're not selling low or buying high on a time frame below the 1 hour, especially if you're trading the same way as me in terms of continuations 1 or 2 hours, reversals 3 or 4 plus. If you are trading the lower time frames, then you just have to think about this, but then one time frame below. So if you're entering on the 1 minute, you want to be making sure that you're not buying high or selling low on the 15 minute rather than the 1 hour. Now, I use the 15 minute slash 1 hour because I find that the 15 minute, 30 minute, 1 hour are very similar in terms of structure. The candles just obviously it's 4 or 15 minutes for 1 hour, so you just see a bit more detail on the 15 minute than in one hour candle. So I'm just going to kind of explain why this is, what you need to be aware of, and yeah, just how to kind of add it into your toolbox whenever it comes to analyzing and forecasting. So you've got to be aware of where a sell high, sell low, buy low is on each time frame, and it becomes easier and easier as you do it. It actually is quite simple once you do it as a habit every day for the pairs that you're looking at. So if I just do dollar yen as an example, on the daily, we are like if we were looking to buy, I wouldn't be looking to sell right now until I saw a breakdown of structure. It could happen, but as I said, I was looking for longs on dollar yen, and I actually took longs this morning, but we didn't get a new high of day, so I just got to my kind of first management point, got a few pips, and it ended up being the rest break even. But I was happy enough with the trade. As long as the momentum continued, I was expecting the price could get possibly into 110 as my kind of main management, well, third management point. So previous day is strong bullish. Now, what does that say to me? Right, well, in terms of the previous day's candle, we are buying high. Now, that doesn't need to be an issue as long as the momentum on the lower time frames is still strong, but you have to be aware that you're buying close to or above the highs of the previous day. Therefore, the previous day's high was that for a reason. It's because price couldn't get any higher. So sellers were obviously around. Then we go to the 4 hour. In terms of overall structure, we're definitely buying high. The buy low area is down in here, the support of the immediate range that we're in just now. That's buy low in terms of the immediate structure, in terms of the medium term structure. But then on the immediate term, because we're day traders, like one 4 hour candle is actually more than what you think it is. This area here is buy low. These wicks are is buy low in the kind of immediate term, and the area above, the wicks above, is sell high. So it's a very tight range on the 4 hour that could have been broken out today, but it's still intact as of just now. So this is the buy low down here, which is usually going to be obviously reversals on the 4 hour if you're buying this low. But also you're going to be fighting against a downward momentum. So then obviously by the time that happens, it's out with my trading time, 6 till 10 p.m. The bullish candle comes in, and yeah, it's not really something that I would be taking myself anyway. But I just wanted to kind of prove the point of buy low, sell high. Now, you can, like, my stop loss on this particular trade today had 4 hour and low of the day protection. So I was buying low, well protected stop loss was worth the risk. Like, that's essentially what trading is about. It's about calculated risk with probability on your side and good management. So then we come to the 1 hour. So we've got the 4 hour where, like, the buy low is down in here in immediate terms, the buy low in medium terms is here. So we have to be aware that, well, we're quite far away from the buy low in medium term. So if the buy low in the immediate structure doesn't hold, then we will probably pull back to, we have a break and retest area here that could hold as support in the future, or we could come back to the ultimate buy low area down in here. So now if we go to the 1 hour, again, what's the medium structure? Well, this is more longer term structure, but the medium structure is quite similar to 4 hour in this example. Like, this is the buy low that was the push to the upside. So this is the 4 hour buy low area that we mentioned on the 4 hour that was the reversal area. Then this up here is definitely buy high in terms of the immediate structure. And this whole wick area is buy low. Okay. But then it's also, you have to take into account the last specific candle. So you do that on the 4 hour and the 1 hour, just as how you would do on the daily. So in terms of right now, the buy high would be above the high of the previous 1 hour candle, and the buy low would be in and around the lows of the closed candle. So we're kind of in the middle right now. As you can see, if you had got in at the highs of the previous 1 hour, you would be in automatic drawdown. Now, I highly suggest that you don't enter longs above the high of the last closed 1 hour, or sells above below the low of the previous 1 hour, because you're automatically getting yourself into trouble unless it's a very, very strong momentum, immediate trend. It's just not necessary. Just wait. So that's me explaining that on the daily, 4 hour, 1 hour. So then we go to the 15 minute. Now, I don't really care about the the last specific candle in the 15 minute because of the time that I'm looking to be in a trade. But the 1 hour obviously is still, well, it's 1 hour buy low, it's 4 hour buy low, it's 15 minute buy low. This blue line is all of those. So ideally, you want to be entering as low, like as close to this area with the confirmation that you want. You can either use the confirmation that's in the course that I talk about, or you can use price, or you can use one that you feel works best for you that I've not spoken about. That's fine. The whole point of, as I say throughout the course, is just kind of giving my knowledge that I wish that I had whenever I first started trading, so that you can then look at this over and over and over again. So in terms of the absolute immediate 15 minute right now, with the time of day, this is 6 o'clock in Spain, so it's 5 o'clock in the UK. The kind of markets are not as busy. You can see here it's a mess, but this area here is the buy low on the 15 minute. Price is in this immediate range. Like, this is the absolute immediate range. And then obviously the 1 hour low is, so the 1 hour low is here. The previous one closed 1 hour is here. So if you were entering around this area, your stop loss would have to be below here. You might as well give it that extra an extra 3-4 pips and get below the low of the current day. And then your first management point has to be this area because you're using the tight 15 minute. But you would be getting into a trade like this because you feel that it's going to get back up to the kind of high of the day and you're at a buy low area with momentum. Obviously, due to the time of day, it's just not really worth it. But that's the case. That is exactly what I'm trying to get across to you. So obviously it's a bullish candle, so that's good. Now this candle's going to close in 20 seconds, so it's probably going to close sideways. As I say, the volume's not in the market. It's just I'm using it as an example, as you'll see in trade examples in the forecast section in the course as well of whenever price is actually in volume. But it's better to do these kind of instructional videos whenever the market's not as busy. So then I'm just reading my notes here. If price is moving too fast to pull back, then wait until price does pull back. Yeah, so that's what I was saying. Like if you're looking for longs and you're getting in above the highs of the previous 1 hour candle, just wait for a pullback. It will happen. Maybe not in that 1 hour, but it will eventually occur. Um, and always, whenever price makes a new high or a new low of the day, always expect a pullback. So this, for example, if price is to make a new high of the day, so taking out this area here, and let me just make it a different color, take out the high of here, you have to expect a pullback. It could come back to this kind of resistance area that's kind of resistance around here, or it could come back down into here, or it could be a fake out, whatever. But whenever you see this, whenever you see price making a new high of the day, especially whenever it's came from the low of the day area, always expect a pullback. Don't get rushed into getting a trade just because it's making a new high without any kind of pullback. Give it time and it'll pay off. So that's this video. Just basically make sure that you're not buying high or selling low on the 15-minute chart. If you're trading obviously lower time frames, you'll see that in the lower time frame section that you can change this slightly, like in terms of it's the same concept, but you just change the time frames that you're thinking about. But to me, this is an absolute no-brainer, and it's helped me a lot since I started implementing this in my trading and understanding what's going on. Because no one's really teaching this. No one's really showing this kind of thought process because a lot are just not really understanding the like putting the multiple time frames together so that you can understand when you're selling high or selling low or buying high or buying low and in what time frame. And if you're taking continuations, the likelihood is that you're naturally going to be buying high on the daily, on the 4 hour, even the 1 hour sometimes. But as long as the momentum's continuing and you feel that you can get in and out the trade within your management points, and it should get to your management points, and it's with trend, with momentum, then you can buy high as long as you're buying low on the lower time frames to give yourself the best chance of being correct for one and getting more pips for two. So yeah, hope you enjoyed this video and have taken notes and take it into your trading. I think that it can be very useful for getting better and clearer with what to expect from the market.